Juergen Meyer now, a portfolio manager at SEB Asset Management, who joins us live from Frankfurt. Juergen, a very good morning to you. Can I just get a general thought about when you look at corporate Europe and the prospects? Are we in a better shape or a worse shape than we were exactly this time last year?
It depends at which companies you look and at which customer base they serve. If you look at southern European companies that depend on a local business and a local customer base, and maybe even sell most of their revenues to the local government, they will probably suffer from austerity measures there. But if you look at global acting companies or even global market leaders, they won't be affected too much by a mild recession in southern Europe because they still can compensate sales losses there with rising revenues in emerging markets, for instance.
So the normal defences, I suppose, food and pharmaceuticals. Let's take a look at pharmaceuticals, because I think you particularly like this industry. We've watched them outperform the market to a certain extent in 2011. Do you expect that to continue in 2012?
Yes, after being an underperformer for around about a decade, the pharmaceutical industry managed, at least in terms of the share price performance, to turn around, and not only relative to the overall market, even in absolute terms, was a gainer. And if we remember, 10 years ago, those companies typically traded at 30 to 40 times earnings. Nowadays, it's typically 10 times earnings, so even given the risks we all know concerning the pipelines, at least this sector looks quite promising on a valuation basis, and I believe that earnings in the sector are still bound to rise.
And the big consumer companies, they're also on your radio. What have we got? We've got Nestle, Heineken, Unilever. Just take us through why those companies are looking so solid for 2012?
In the past, and I am absolutely sure in the future as well, these companies prove to be real evergreens. Unimportant how the economic development was, they were at least stable earners in good times. They managed to raise earnings by around about 10%. In bad times, earnings rise by around about 4%. But given their low valuation, it seems unimportant if earnings of next year rise by 4 or by 10% per annum.
Now, goodness knows, the auto industry has seen its ups and downs in 2011. You kind of quite like
Yes.
the auto industry, but I'm guessing it's the higher-end stuff, the top-end BMWs. Am I right on the right track there?
Yes, absolutely right. I divide clearly between premium manufacturers and the mass manufacturers. I only like the first. I believe is the main value of an auto manufacturer from an investor's point of view lies in its brand. And, well, the most precious brand are the BMWs, Mercedes and Porsches.
Juergen Meyer, portfolio manager at SEB Asset Management. I'm grateful to you. Thanks for joining us live from Frankfurt.